Hello, everyone, and a very warm welcome to this ICAST webinar, Sustainability Data that Drives Change. Sustainability reporting is a vital process for any business success and survival. This makes the ability to source reliable and high quality data absolutely crucial. This webinar will explore the evolving role of sustainability data in business and finance, giving you the opportunity to understand how quality data drives informed decisions and shapes sustainability reporting. For those who don't know me, my name is James Barber, Director of Policy Leadership here at ICAST, and I have the pleasure of being your host today. For today's discussion, I'm delighted that I'm joined by Victoria Skilbeck, CA, Vice President, Climate and Sustainability Consultant, MSCI, and member of the ICAST Sustainability Committee. Also joined by Dr. Mark Lepere, Co-founder and Chief Science Officer of OmniView. And finally, Rob Turnbull, Sustainability Manager, Edinburgh International Conference Centre, EIC. Before we begin, just a few housekeeping matters to remind you of. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously. We will be saving all your questions until towards the end of the webinar for a live Q&A. Please also join the conversation today through the chat box accessed at the top of your screen. This allows you to comment or discuss with fellow attendees on matters covered by this webinar. We are, of course, recording this webinar and will make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. We look forward to receiving your questions throughout the course of the webinar, and of course, we will try and get to as many of those as possible. But to begin with, I would just like to ask our panelists to provide a bit more information about their current roles. So firstly, Victoria, please.
Thank you, James. So I am Victoria Skilbeck. I'm a sustainability and climate consultant at MSCI. So MSCI provides investors with tools to help them make better investment decisions. And part of this is sustainability and climate data. So, for example, we would provide a company's carbon emissions, the number of women they have on the board, or the amount of water they use. In my role specifically, I work with asset owners, asset managers, and investment consultants to help them understand the data and integrate it into their investment process.
Thanks very much, Victoria. Mark, please.
Good morning. Thank you, James. Good morning, everyone. I'm Dr. Mark Lepere. I have two hats. No hair, but two hats. I am the Sustainability and ESG lead at King's Business School and King's College in London. And then the other hat is, as James introduced me, a company called OmniView, which actually came out of my academic research and essentially is an accounting platform to make it really easy for the non-corporates, normal companies, to report on their sustainability data, both in the environmental, social, and governance buckets.
Thanks very much, Mark. Rob, please.
Oh, good morning. My name is Rob Turnbull. I am the Sustainability Manager at the Edinburgh International Conference Centre. So I work with both the back of house and the front of house. So looking at how the building operates and trying to make sure it's as sustainable as possible. Also work with clients for when their events are coming in to make sure we ensure that those events are sustainable as well. But really happy to be here and looking forward to your questions.
Thanks very much, Rob, and it's great to have all our panelists here. And I'm really looking forward to this discussion, and we'll now get into the flow. So firstly, please, to our panelists, and I'm going to Rob first in this. Firstly, the importance of quality data for decision making and reporting. Why is sustainability data important? How is it used in your organization, and is it as important as financial data? And of course, linked to that, what key decisions has analysis of quality sustainability data allowed you to make, and has the business case for such data increased over time? Over to you, Rob.
Thanks very much. That's quite a big question, quite a lot in there, I think. To pick up on one of the notes, is sustainability data as important as financial data? I would say yes, and I think they're inherently linked as well. If you use less electricity, you pay for less electricity, therefore your finances are improved. Within our business, we look at quite a lot of data. And we obviously look at the back of house data, so looking at our utilities, how much electricity we're using, how much gas, how much water, and we can monitor that on quite a close basis. So we can actually look at how the building operates when there's events in, when there's not events in, but also as well what type of events we have within the building as well. So it's quite interesting to see how the data varies between events. So if we have an exhibition, they obviously use a lot more electricity than if we have, say, just a meeting for 20 people. So
Thanks very much.
That answers all your questions.
No, but it's just very interesting that, you know, the different uses you will have for that building and what that will then mean for those who are hiring and so forth. And I'm sure that's really valuable information for those, you know, who are hiring your building. Now, I'm going to move across to Victoria. Victoria, do you have any comments on this one, please?
Yeah, I would just say that, yeah, sustainability data is super important. So it helps investors and companies consider the full range of risks that are applicable to their business. So not just focusing on the financial statements. And so, yeah, really consider the full range of risks. It's used a lot for helping companies to access finance. So there's instances where investors may have mandates for companies to have, for example, certain ESG ratings. If the companies aren't able to quantify and disclose their sustainability data, they might not get access to that finance. It also helps build relationships with your different stakeholders. So shows your employees that you actually are monitoring and do care about certain issues, and also your the rest of society, so your customers, helps you set also good targets that you can work towards.
Thanks very much, Victoria. Mark, any thoughts on this one, please?
Yeah, I think it's worth just maybe explaining the mechanism by which the things that Victoria was talking about actually happen. So if we want businesses, and the aim is to get businesses to start maybe transitioning to lower carbon products, procedures, equipment, then they need economic incentives to do that. And the only way that the capital markets, the banks, people issuing bonds, etc., are going to provide those incentives is if they can price the risk, both the physical and transition risks, as they're called, of climate change. So imagine you're down in Valencia, you have a hotel, you're looking at your risks today very differently as a result of what happened, as an example. So the ability to price risk is absolutely crucial. And at the moment, the data is, you know, it's not particularly robust, but of course we have the new accounting standards coming in, the IFRS accounting standards, which aims to make it both as complete, but also as consistent and comparable as financial data. And in fact, James, the other night I was at an event with Richard Barker, who's a main board director of the ISSB, the IFRS, and he basically made a really interesting point. He said sustainability data is financial data because it's all about being material to investors in order to make those decisions. So I think that mechanism is really important. If people can price the risks, they can then create products that do give us cheaper loans, you know, better yields on bonds, etc. And so that's how I think it becomes decision useful.
And Mark, just coming back to you in that one, do you see that developing there? Are we getting further ahead with being able to properly price risk?
I think right now the answer is not really, because there's too much uncertainty, I think, which is why these new standards are being proposed and requested by investors, actually. So the body that runs the capital markets around the world, IOSCO, they basically went to the IFRS, the International Financial Reporting Standards, well known to you, James, obviously, and Victoria, other accountants on the call, and said, look, this stuff is important. We do need it to price. But at the moment, it's just too uncertain. It's too much of a free for all. It's voluntary. It's not regulated. It's not audited. It's just too different from financial information. We really can't use it. And so they went to them and they asked them to write new guidelines and guardrails, just as they have on the financial side, for non-financial or sustainability data. And all that's in place and was launched last year. I believe about 40 jurisdictions around the world are now in the process of adopting these standards. I think it's already covering something like 55% of GDP. And what's really important for us is that the new government have said that they will make a decision on this in the first quarter. And certainly, according to this event I was at the other night, which had a lot of civil servants and special advisors at it, it's pretty inconceivable that London can leave itself out of the world's capital market. So I think it's a pretty fair bet to say that we will adopt them. And so I think that would help a lot, James. I think it'll start to get the standard up and make it more consistent and comparable with financial data, and therefore more useful.
Victoria, would you like to come back in this one?
It's okay, we can carry on.
Yeah, sure. Okay, so we've talked there about the data, but do we have appropriate controls over this data? You know, in financial reporting, controls, obviously, we're well used to that. They are very mature and so forth. When it comes to sustainability data, is the control environment as mature? Rob, could I come back to you firstly in that one?
Yeah, it's certainly not. I think, we've certainly been looking at financial data for a long time now, ever since businesses existed. Sustainability data is still in its infancy, I would say. It's becoming more to the forefront. So at the moment, there's more guidelines than sort of hard and fast rules that you have to stick by. That unfortunately means that everybody reports the sustainability data slightly differently. But if we can get them all within the same framework, then I think sustainability data can be really, really powerful and can show a lot of trends within the industry.
And Victoria, are you seeing that from your clients in terms of controls and so forth?
Yeah, I think it's definitely behind the financially reported data, but the good thing is that we've been doing that for years, so there's the opportunity to learn and move quite fast with sustainability data. And we're definitely seeing that, especially with the regulations that are coming in that mean that investors need to report their sustainability practices, such as the Sustainable Finance Disclosure Regulations, and also company-specific regulations. It means that people really have to focus on it and meet specific requirements. So that is very helpful. It can be very overwhelming, but will hopefully help people catch up and make sure that we have this really good quality data.
Thanks very much, Victoria. And yeah, no, certainly when we think about professional accountants and chartered accountants, that the skill sets that we get from our training certainly, I think, very much comes into vogue here. And it's a new area, but no, there's a lot we already have in our toolkit that I think can be very useful as we look to serve the public interest. Okay, moving on. What investors and other stakeholders are looking for, is absolutely crucial. So what types of data do you collect in your role and why? And is your data collection driven by business need, regulation, supply chain requirements, customer demand, or something else? Rob, can I come back to you in that one, please?
Yeah, so we collect quite a lot of data, and it's to try to give us a better picture of how the building is operating and trends in how events actually are happening. Back in the day, it didn't really matter what you did. You just came in, set up, and went home. Nowadays, we're obviously a bit more interested in what's going on within the building. So we track all our utilities, so electricity, gas, water. We track our waste, and we break that down to general, food, oil, and glass, which some events obviously go through a lot of glass. We also look at food donations as well. So we track how much food we actually donate into the local community. So if there's a dinner on and not as many people show up as they thought, we can actually make sure that food doesn't go into the bin, it actually gets donated. We also look at delegate travel as well, which is quite a finicky one, shall I say, because that is partly our responsibility, how people actually get to the event. Luckily enough, the ICC is actually a city centre venue, which is quite unusual, which means a lot of people use public transport to get here. But if you're out in the middle of nowhere, shall we say, you'll find a lot of people maybe drive or get there with the less sustainable methods. Within the business itself, we actually travel, we actually monitor our business travel as well, because we're trying to make sure that our operations day to day are less impactful. I even keep an eye on the printing to make sure we're not printing too much. So we really go into it and see how much data we can get, and putting this all together gives us a good overview of how we're operating.
Thanks very much, Rob. Victoria, please, any thoughts?
Yeah, so MSCI, we data is our world. So we collect sustainability and climate data for about 17,000 different companies or issuers. For those, we have about 4,000 raw data points. We're collecting 17,000 derived data, and that makes about 80 million data points a year that we are distributing to investors. So there's a lot going on. We're best known, I'd say, for our ESG ratings. So that's a measure of how resilient companies are to financially material ESG risks. So if you're thinking about, okay, if you have a data center, you need to make sure that it's kept cool, and also you use a lot of water. You might think about, okay, where is this located? Have I taken that into consideration through my management? Do we need to change our business practices? So all of this would be a cost for the company. So it's therefore financially material. So we're rating companies about how prepared they are to manage these risks and the risks they're exposed to, and the opportunities for us on a scale of AAA to CCC, with the leaders being the AAAs and laggards being a CCC. So that's the high level data. And then we go all the way down to looking at, okay, where are companies' assets located? Do you have an office that's in a healthy forest and could have an impact on the species that live there? So it's real broad range, but a lot of sustainability data.
Thanks very much, Victoria. Mark, any thoughts on this one, please?
Just in the interest of, so there is a difference. It's an important difference between the things Victoria spoke about. Ratings are essentially MSCI's expert judgment of something separate, which is the raw data. And the raw data is self-reported. And the good news, so let me talk about the raw data. The good news is that I think surprisingly for most companies, big and small, that actually a lot of companies have a lot of this data already. They're just not aware that it could be used for this purpose. So Rob, you mentioned tracking your electricity. Well, you must get electricity bills. It says the kilowatt usage on the electricity bill. That's all that's required to calculate Scope 2 emissions, for instance. So most decent companies of any size have some kind of HR record, contracts of employment, etc. A lot of that data can help towards this. So I think the first bit of good news is that it may surprise you how much of the data already exists in anything like a well-run company, whether it's large or small. The second thing is that big companies, obviously, just like on the financial side, have a much heavier burden of measurement, reporting, analysis, in any case, just the way they go about their businesses. And it's true on this side as well. They are subject to some of the regulations that Victoria mentioned, things like TCFD, which is a kind of statement almost of how you're moving your business. We're trying to reduce carbon over time, carbon emissions over time. You know, that's been required in the financial accounts for over a year and a half, I think now. So a lot of big companies are having to do things anyway. There's a lot of new European Union regulation, which if they do business over there, they are affected by. And of course, there's a lot of UK government regulation already that larger companies have to comply with. Having said that, there's a lot of data I think that's got very useful for the business that's got nothing to do with the regulation. Just like on the financial side, I have a lot of metrics in my company, not all of which I have to put into the report and accounts. It's exactly the same. And then lastly, just turning to SMEs, are they involved at all? Well, the answer is yes, because you mentioned it there, Rob, or James, in the question, that the big companies have to ask for details of those companies that are on their value chains. So this is particularly, the most obvious example of this is around Scope 3 emissions, which essentially are the greenhouse gas emissions that are a function of you doing business, essentially, outside of what you control directly or you're buying in through electricity. And if you're on a company value chain, for instance, if you're an academy trust down here in England, you have to fill a form in for the government which says what your carbon emissions are and what you're doing to reduce them, right? So that's just because you happen to be a school, or I happen to be leasing trucks to a large company. It has to know what I'm doing. So some of these requests, a lot of these requests are starting to come down, and more are going to, that's going to be the case more and more. So little companies, although there isn't a direct mandate to report now, actually increasingly they're having to. And to go back to Rob's point, there's a huge value in this. If you understand how much water you're saving, you understand how much money you're saving by not wasting the water. Or food waste is a classic example of wastage of money, etc. So if you look after your staff better, you probably get less of a churn, more engagement, etc. Again, really beneficial on the bottom line. So sustainability really is financial data, as Richard was saying, and I think it exists, as I say, in a lot of companies already.
Mark, can I just come back on a point there in terms of, large corporations requesting information from smaller entities? Is there a move towards more standardization in these information requests, or are we still seeing various different types of information being sought by these larger corporates? Because it must also be quite a burden in these smaller entities if they're faced with numerous requests and it's not all the same.
Absolutely. I think, again, it's early days. So the answer, James, as you know, is I think it still is a bit of a mess. It's a bit of an alphabet soup. Lots of people are getting lots of different spreadsheets and requests. However, the good news is it is standardizing. And it's standardizing because the European regulations are now out. This is the first year of reporting. So when large companies report in the spring, they'll be reporting for financial year 2024. That's the first full proper year. So we will know what these metrics are, the ones they required to fill in. Plus, don't forget these new accounting standards that we've been talking about. They will bring standardization to it as well. So I think it's still a bit messy, but another year, 18 months, it'll become, I think we'll get pretty quickly down to a fairly obvious set of core metrics that will be fine for smaller companies. And obviously larger companies will have a larger set of metrics, just as we do in financial reporting. We have a heavy burden and a light burden, and I think it'll mirror, and there'll be core metrics that are shared across both.
Thanks very much, Mark. Moving on now to how we source quality data. So where do you source data from, and how do you ensure the reliability of the data provided? And Rob, I'll come back to you firstly in this one.
Yeah, I just want to pick up from something that Mark was talking about there when you were saying that, we get utility bills and, we get the kilowatt hours on that. That's kind of how our sustainability journey actually started. Was our finance director got the bill through and thought, I'm not quite sure this is right. So what he would do is go down each morning and check the electricity meter and just make a note of the kilowatt hours. And he started doing that every day. And that started off as a note, that then became a form, that then became a spreadsheet, that then became an online portal, that then became what we have today, which is automatic meter readers. And what I was doing was simply checking that we were paying the right amount of money for the electricity that we're using. And that was kind of what it was derived at. But once we have all that data, then what else can we do with it? We can then start calculating our CO2 emissions. We can also start looking at trends. We can start seeing how much electricity we were using 30 years ago versus how much we were using yesterday. By having that data, we can actually see how well we've improved over, say, the past 10 years. And I think that's really remarkable. It's like just by gathering somebody starting off by saying, right, I'm not sure this bill is correct. Let me just make a note of that. Going to we can now actually report our CO2 emissions for scope 1, 2, and a good chunk of 3. And it bore out of a finance person just being, questioning that data.
That's a great story, Rob. That's brilliant.
Yeah, I think sorry, Rob, on you go.
Yeah, I was just saying, how we source the data. I think, obviously back in the day, he's making that note. There is that chance of human error. If he was off a day, we missed that day's data. Nowadays, you can actually get, automatic meter readers, which will read the meter for you. Most of these companies will offer you a smart meter, and it's very easy to get that installed. And you can then have an online portal of how your building is reacting or how your company is reacting over that day. And that's quite an easy thing to do, but that gives you really quality data on what your building is doing. And that's the same for gas and water as well. So again, you can look at all your utilities and how they're reacting to your building use.
That's an excellent point, Rob, and it really gets across this message of just getting started. This all has to start somewhere, and some people think there's too much out there and they really don't know where to start. And I think you've just set out there, well, here's one example of a business which did start a number of years ago and what it's led to. So great to hear that particular point. Victoria, What data does your organisation provide?
So I think I've been through a lot of what we send to investors and what we provide. So maybe to touch on where we're collecting it from. So we have about 300 different data sources. We're using publicly available data. Part of this is company disclosed data, so it might be their sustainability reports, their 10K filings, but we also make sure to augment this with external data sets. So it could be government databases, NGO data. For example, we get carbon emissions from CDP, and the whole point is we try not to penalise smaller companies that might have less people working in sustainability, and so they don't have the ability to collect, as Rob's clearly got a lot of capacity to collect all this data, but not everybody does. So we try and augment this with data sets to fill any gaps so people aren't penalised in our ratings process. But yeah, a range of different sources. We use dual vendor verification. So we try and pull data from multiple different places and check it together to ensure that it's consistent. And for carbon emissions, for example, we also check to our own estimation model. And then we ask the companies themselves to verify the data so they can access everything that we rate them on. And if they disagree, they can provide us with a publicly available source. So lots of different places to try and get the best quality data.
And Victoria, could I ask there, are you making use of any technology in terms of maybe even AI to assist you in this verification process?
Yeah, so we use AI to do lots of the basic sort of scraping, but also we have a lot of people. So we think AI is super important, but also at the moment it still comes with quite a lot of risks. So it's important that we have hundreds of people that are really manually checking all of this data. Yeah, I also have my own personal worries about the climate implications of everybody using all of the AI technology and how that's exploding. So, but yeah, it is used a lot to make our processes more efficient.
That's another excellent point. Yeah, something really coming to the fore, water usage and energy usage and so forth with the AI, and should we be using it more responsibly? And I can get a plug in here that we will be having changes to our code of ethics starting from 1 January, which will look to highlight that there really is this need to be using AI responsibly, as I'm sure everyone on this webinar knows. But Mark, any comments you would like to add in this one?
Yes, please. I think, again, going back to what I was saying earlier, a lot of this data is already in the business. So we've worked out for the company side of this, we've worked out that actually there's about 9 sources of data that don't all apply. So depending on your business, if you don't have facilities, machinery, vehicles, clearly those things don't matter. But every business has accounting data, and that gives you something around the 60% mark of what you need. So accounting data is very, very rich. HR data is very rich. And the other thing I would say is that, to your point about veracity, James, and I'm not making a plug here for accounting particularly, but it's true. Remember what I said at the beginning. This has to be as good as financial data. Therefore, it does need audit. I know the technical word is assurance. It has to get to there. One of the major problems of AI and this whole area right now is that it's all voluntary data. Greenwashing is rife. There's no point pretending it isn't. It is. Right? And the trouble is AI does the scraping. It picks up whatever the company reports, good or bad, right or wrong, accurate or inaccurate. Okay? And let's be honest, greenwashing works. That's why most people do it, because they know that's what people want to hear. It is not necessarily reflective of the truth. And so we do need to have audit. I think the real core skills of accounting, you mentioned there, James, at the beginning, are really important in this space. Great to hear you're introducing the ethics. But I think the good news is all those invoices are filled with data that are really helpful in this space, both outgoing and incoming. And as I say, HR, and then depending on your business, you have other areas which may or may not be important. But it's like everything. If you're depending on the nature of your industry, you won't have to think about half of the data sources, but there's only about 8 or 9 needed anyway.
Thanks so much, Mark. And that really, that focus there in 8 or 9 sort of sources, I think really sends a strong message here. And again, it ties with messaging earlier. We just really need to get started here for those who haven't. And once you're on this journey, I think then you can make very, very quick progress. And there's obviously a lot happening. Thinking about some of the potential pitfalls in the data collection, do we have any tips really to help ensure you do get quality data collection? And for example, have you had to restate any of your prior year reporting due to improvements in data collection methodology? Mark, could I start with you in this one?
Yeah, I think my big overall tip is to convert it to money. So let me give you an example. We run a big course for the hospitality industry at King's, for senior executives in the hospitality industry. And food waste is a huge issue in that industry, as you'd imagine. And the successful companies who are progressive in this area, what they do is they go to the chef and they say, do you realize how much food and therefore how much money you're wasting? And the chef gets all upset and they spend a day with them and they go, look, you threw away all those carrots because they weren't the right shape, or you cut these ones badly, you threw those ones away. Then you cook them. Then the guests left half it on their plate or didn't, at the buffet, whatever it may be. Once you start adding all that up and you start adding the cost of it all up, the chef goes, oh my God. Then you say to the chef, I'll tell you what, if you give me half of the savings back, you can have the other half for a new cooker or whatever it is you want. Suddenly everyone's interested in playing. So again, it's a bit like your story, Rob. I think getting in there, equating it to money, making sense of it from both sides, the financial and the non-financial, I think is the key to this. And I think when you do that, literally people are not having a sustainability conversation anymore. They're having a normal business conversation, which why wouldn't you do it? And so I think that's a really important way to get started.
Thanks so much, Mark. Rob, do you have any thoughts on this in terms of potential pitfalls in the data collection?
Yeah, it can be quite sort of time intensive, shall we say. And I think trying to remove human error from that as well is also good. Like I say, our journey started with somebody making a note on a bit of paper, and you write one number wrong and that puts all your calculations off. So trying to remove that human error from the equation, I think, is the best way to go. But if that's where you have to start, that's where you have to start. Once you start collecting data, you'll then see how good it is. Once you've got good data, then you can move to better data, then you can move to better data. And I think just getting that foot on the journey and is invaluable. I think once you start, it's very hard to stop.
Thanks so much, Rob. Victoria, anything you would like to add?
I think I would, agree with the others that it's just sort of starting and being brave and appreciating that it's very daunting for everybody. So speak to your peers. Don't be afraid to report. I think also you mentioned restating data. So I think also don't be afraid to restate. So climate change is evolving consistently. The planet is evolving, the science is evolving, and all of these metrics are going to change over time as we're learning more. So don't sort of wait for it to be perfect before you start, because it's not going to be. And try and just be positive and optimistic. I think everybody's actually in a really good position if they have the ability to move companies forward in this direction. So yeah, that's what I would say. Can I also ask Rob a question?
Yeah, of course.
I was just going to ask you, Rob, how long did it take for your company to move from focusing on carbon emissions to now looking at such a broad range of factors?
I would say that's something that's happened over the past 10 years, I'd say, something like that. So we've always had somebody in sort of a sustainability role. We've been out open for 30 years, just to put that in context. And we always had somebody looking at sustainability as a side job or a side project. But then we did have somebody come in who was purely focused on sustainability, and it was their job to make sure that the building was operating efficiently, but also that the clients and their events were operating efficiently as well. I think that was quite new for the time. But moving from just looking at what date we had and then calculating carbon emissions I think, yeah, it's a natural progression.
Just very quickly, James, just to come back, Victoria, I don't think it is daunting. I think everybody's telling everybody else how daunting it is. It really isn't. So, for instance, the company we've built is essentially, it's a platform designed to be used by accountants, okay? And essentially, it's like Xero or QuickBooks. I mean, it's designed to be an online accounting system for non-financial or sustainability data, right? It collects a lot of this stuff automatically, drag and drop it in. The accountant has a lot of the data anyway. It's there. It does all the calculations for you. It spits a report out the other end. It's not complicated. It's not daunting. So I think technology has a huge role to play. I think it was very daunting 10 years ago, Rob, when you started, but it's a lot less so now.
We've actually got an interesting story on that one. So we worked with a professional conference organizer who suddenly thought, right, well, we deal with a lot of venues and obviously go around the world. So they went to them and said, right, well, what was your scope 1, 2, and 3 emissions? And the amount of variance in the data they got back was astronomical. And that was because everyone was doing it so slightly differently, and they were looking at their grid connections, how they were operating. I think you've got to kind of strip it back a little bit and go back to the basic and say, right, well, how much energy you using, what's your kilowatt hours usage, and get the basic data and then do the calculations yourself. And I think, what we touched on before is processing that data. If you are a small company, that is where AI can help. It's not everybody's got, a person who just sits and does sustainability, but if you can gather the data, get AI to analyze it for you, you'll still see the trends and the benefit from that.
Or use your accountant who's doing it. No, but seriously, I mean, it's a huge, they're doing so much of the work. They've got the data open anyway. They may as well think, oh, I could do it for this as well as this. It's not. It literally is a bolt-on. It's an added service, really. And of course, they got all the other skills, James, that you mentioned at the outset.
Thanks very much, everyone. Before I move on to the live Q&A, Victoria, I'd just like to come back about the restatements and your experience of stakeholders and when they see these restatements. Do they expect it? Or do they ask, real serious questions about why is this happening? Or is there an expectation in the marketplace for the reasons you described that, well, this is to be expected in the early years?
I think it sort of depends on who you speak to. To be honest, that's maybe not a very easy, helpful answer, but I think there is an expectation in the market that methodologies evolve. For example, if we're looking at scenario analysis and how companies are going to perform in, for example, a 5-degree world or a 1.5-degree world, there's different scenarios that are put out by scientific bodies. So in that case, investors would be pushing us to integrate those different scenarios so they can do it in the, for example, TCFD reporting that Mark mentioned. So there's some cases where they want us to change our methodologies, so then they can evolve. We also have the ability to re-baseline, where you could use the methodology and pretend it's a year ago, so you're still comparing emissions using today's methodology, for example. So, but I think it's all an education piece, and I think if we all take a step back, realize we're trying our best, and emissions are a lot of the time an estimate anyway, it's a bit more helpful.
I actually think, James, it's an unknown. I think everybody accepts the methodologies are changing, and therefore the numbers do have to be restated. I mean, we've had to do it quite often with clients because they didn't give us a full data set, or there was some bits of data missing or whatever. You restate it, and it's different, and you have to go back and, just as you would in the financial side, restate the last couple of years. I actually think it could be a very big issue going forward, because I don't think anyone has really thought about the implications of this from an investor's perspective. If I think I'm investing in a company that's been on this net zero path, and all of a sudden they're really not on that path, that's going to be a problem. So I think it's yet to come. I think it is a big unknown. In fact, I'm working on a paper right now which looks at underreporting and essentially the need for restatements. And I think it's a really good point, James. I think there's a lot of debate to be had around this. Let's put it that way.
Maybe I could add a point as well. So just on like climate targets as well, and net zero targets. So I entirely agree with you there. And I think lots of companies have set, or we see that companies have set net zero targets, but maybe they're focusing on a tiny portion of their company in the UK, when actually they have a vast global company, or they're just focusing on their scope 1 emissions. So people come to us and they say, okay, but they have a net zero target, but actually it's going under the hood to try and, as you say, mitigate the greenwashing and really understand what the company is doing rather than just what they're saying.
Yeah, I think the other side of that is you've got greenwashing where everyone's putting out this data saying how green they are. You've also got green hushing, which is kind of the other side of it, where people are doing so many great things but are too scared to speak up. But I think the thing is we're all in the same problem. We've all got the same ideas. You know, if we're brave enough to speak up and say we're doing this, we're trying to do something, it may work or may it not. You know, this is what we're trying, and then somebody can say, well, I can try that too, or I tried that, but then this worked better. So I think we just need to be a bit braver with our sustainability data and say this is what we're doing and we are trying, you know.
And it is a role for the regulation and the accounting standards, Rob. Is to give you that. Everybody will have to do it, so you're not on your own anymore. So that is a real important role. The guidelines, the guardrails will be there for everybody, and they'll be the same.
Thanks so much. Okay, so before we move on to the live Q&A from the questions from our audience, it'd be great if our audience could leave us a rating for today's webinar. There will be a poll appearing on your screens now or in the chat box at the top of your screen. We really appreciate your feedback, so please take a few moments to respond. Thank you. And we'll now move into our live Q&A, and please feel free to ask any questions using the Q&A box at the top of the screen. So I look forward to receiving as many questions as we can get, please.
I think there's some questions already in the Q&A section.
Yeah, I think the first one's actually for me, I think. It says, does the EICC charge its clients differently amounts based on the electricity they use for their event? Short answer, no, but what we do is we build a package with the client. So if they want a room, they pay for the room. If they want power to that room, they pay a bit more. If they want technology in that room, if they want a screen, a laptop, then that gets added on as well. So you only pay for what you use, but again, it depends on the event and how we work with the clients.
Thanks very much. Is there any further tips we have for SMEs in terms of data collection? Because obviously this is really a key area. We have all the large corporates and they have systems in place and so forth. Any real key messages we'd like to give to SMEs in terms of data collection? And Mark, could I start with you, please?
Yeah, I mean, I would truly advise you to go to your accountant. As I said, they've got a vast amount of this data. They've got the skills. They have ethics to make sure it's real. They'll protect you from reputational risk of greenwashing or making mistakes. Of course, they make the odd mistake, but generally, as a profession, it's pretty impressive in terms of its reliability and its trustworthiness. And most importantly, they will set out all the notes, just like they do on the financial side, of how they've calculated things, what the data sets are, what the methods used were. And that's all anybody can expect. They may make a wrong judgment in your opinion, but at least if you know the judgment they've made and why they've made it, then you can come to an informed view. So I would go to your accountant. It won't cost that much more on top of what they're doing. And you do get an answer to one of the questions here. If you wanted also to get them to assure the data for you or audit it, that can easily be done as well. And I think that would give both you and all your stakeholders a huge degree of confidence in the robustness of the data, which is really the key thing. If you're going to start making decisions on it, allocate resources on the basis of it, you need to have confidence in it, just like your stakeholders do.
Thanks very much, Mark. Now, someone from the audience has said, a great example, Rob, and I'm a great believer in progress over perfection. However, Deloitte recently reported that 46% of FTSE 100 companies restated their sustainability metrics amid new reporting standards, with 89% of their reinstatements involving GHG emissions, highlighting volatility in ESG reporting, not to mention greenwashing suggestions. Is there therefore a risk that this could damage the reputation and trust? Rob, any views?
Yeah, I think it goes back to my previous point about being a bit brave. Unfortunately, you do have to stick your head out a little bit. People will criticize you for doing it, but you are doing something important. If you report your greenhouse gas emissions and they're all slightly off, then you report them. Restate them, saying yes, we made an error. Hold up your hands, and then do it again. So I think that the damage in reputation and trust is more that if you don't correct yourself, if you're not being honest and saying like, yeah, holding up your hands and saying we did make a mistake, I think that's where the damage in reputation and trust actually comes from, rather than not reporting, if that makes sense.
I think maybe James, just to help a little bit on that one, that the current way of accounting for greenhouse gas emissions is a thing called the GHG protocol, and it is the world way of doing it. It's the recognized methodology, and it has within it a huge scope for using different methods, approaches, and data sets. And the truth is you do get very different results when you use any combination of those. So again, we wrote a paper last year called Emissions Gaming. And as the economic incentives grow to game the system, it will be possible to do that in the current version of the protocol. The good news is that as part of the IFRS work, they have now joined, or at least are an observer on the GHG protocol, and they are working with the protocol to come up with version 2, which should aim to reduce some of this uncertainty, because the IFRS standards require the use of the protocol. So the protocol has to get better. But the good news is the work is happening and it is being done. It's probably about 18 months, 2 years away.
Thanks so much, Mark. And one that I'm going to answer the question that's come in terms of what in this webinar do we mean by sustainability. So from an ICAS perspective, our definition is sustainability is a concept that refers to the ability to maintain continuously over time. It is about ensuring a prosperous future for people and planet and considering environmental and social risks and opportunities. Different organizations use other definitions, but they are anchored in this basic long-term concept. Embedding a sustainability approach encompasses management of risks and opportunities, responsible business culture, strategy and operations, and includes consideration of ESG factors. So moving on to another question, and this is to all panelists. What skills are you looking for university graduates to be able to do sustainability jobs? So I'll go to Victoria firstly in this one. Any thoughts, Victoria, as to what sort of skills are you thinking of in this perspective?
Let me have a think. So if I think of the people that come in our internships that we have, so I think, well, in my role, people skills is very important. So it depends which aspect you're going to. So either you can go into the data analysis world and coding and really getting ins and outs of the research and the sustainability research, or move into like people skills, helping people understand the data. If it's helpful, I did a biology degree, and then I moved to EY, trained as a chartered accountant and an auditor, and then realised that these worlds could collide and work together. So I think it's a range of different things, and there's lots of jobs in the space.
Thanks so much, Rob. Any views?
Yeah, I think just having a passion for sustainability is a good start. If you're interested in something, you'll always work a bit harder at it. My background's actually academia. I was doing engineering, and then I think like most people fell into the events industry and found it such a rich world that kind of nobody really knows about. There's so much going on, so many different job roles, and sustainability is just one of them. And trying to make events which have quite a large, environmental footprint, but also have quite a good economic and social benefit as well. Trying to make them more sustainable, I think, is really an interesting role. With regards to skills, I suppose, data analysis, you do deal with a lot of data, but also people skills as well, because sometimes you do have to have those conversations of you're using too much electricity and you need to stop, and you need to be able to put that into quite a nice way and get them to do it. So people skills is definitely handy.
Thanks so much, Mark. Anything you'd like to add?
Knowledge. Nobody knows how to do this. Anyone who tells you they do is not being truthful. We're all doing this for the first time. The people who know the least of all are probably the senior business leaders of most of our companies. It's just a generational issue. I'm of that generation, right? with a bit of luck, the next generation, for instance, of accountants that ICAS are training will have this kind of baked into them. But we've got a 20, 25-year problem where we have to learn what we're doing. And there is no substitute for knowledge. This is not, it doesn't matter how brilliant an accountant or engineer or whatever you are, it is not something you can pick up in 10 or 15 minutes. It is not something you can do in an elevator. It just isn't. You really have to go to courses. I would say this, but it's true. As an academic, you have to learn. You have to learn something about the science, the data, the interaction of all these things between the social effects, inequality. There's a lot to it. It's a rewiring of our entire world. And to go into it and just say, I really care, or I'm quite good with numbers, is just, one has to have an underlying basis, a foundation of solid knowledge and understanding and critical ability.
Thanks very much, Mark. That takes us back to our code of ethics and professional competence that you have to have in the areas in which you are operating. A question here about assurance, Mark. I'll give this one to you. How do we measure the assurance quality? Unlike the audit quality for financial statement audits, which can be proxied by the audit fees, academics use the content analysis to measure assurance quality. But this is very time-consuming and unrealistic for academic research. Do you have any thoughts on this, Mark?
Very quickly. I mean, it's nothing like an academic content analysis. There is the current standard is a thing called the ISAE 3000. It's being replaced later this year by the ISSA 5000, which essentially is a new code of how to audit or assure sustainability data. So it's being upgraded and to include sustainability. And there are essentially ways of testing results against source documentation, just like you do on the financial side. Different questions, different tests, but essentially it's the same process. But James, obviously, you know much more about it than I do, but it's nothing like an academic content analysis.
No, but just quickly on the assurance, the ISA 5000 was approved by the International Auditing and Assurance Standards Board that is meeting in September. The FRC will consider this next year, and I would expect them to approve that for use in the UK in due course. And it's the overarching sustainability assurance standard, just to let our audience know. Moving on, Victoria, what outcomes are we actually trying to achieve with sustainability reporting? And does the panel believe it's mainly about helping analysts assess future earnings, or is it mainly to reduce companies' cost of capital by making them more palatable to ESG investors? Any thoughts, Victoria?
What was the start of the question? Sorry, I carried on listening to that.
What outcomes are we actually trying to achieve with sustainability reporting, if we just focus on that particular aspect?
Okay, so I think it depends on, so sort of turning it around a bit, depends on what you are wanting to achieve. So with sustainability reporting, and I've seen a few questions as well in the chat that are saying, okay, should we be using ESG or sustainability, or are we looking at impact? And I think that is actually really crucial. So it's understanding that it's not all the same. So if we're talking about impact, we're thinking about the positive impact that companies can have on improving the world, and the sustainable development goals are looking at different aspects of that. If we're looking at ESG ratings, it's more financially measurable ESG risks. So that is not a goodness rating. And I think sustainability reporting in general, and the more underlying data points, we're just trying to make sure that the data is available, and that people can move towards improving their businesses by using all this extra information. But I think it's important to know what you're targeting rather than just thinking, okay, this is sustainability and it's all the same thing.
Thanks very much, Victoria. In terms of sustainability education, it's a really challenging time with so many evolving, changing standards. What do you think are the key learns for trainee accountants regarding sustainability? Rob, can I come to you in that one, please?
You can. I'm not an accountant, but I can certainly talk about what you need to know. I think, as Mark was saying earlier, sort of the fundamentals of sustainability is how things interact, climate change, the wider aspect of sustainability. I think having a fundamental understanding of that kind of guides where you're going to go. you're going to start looking at, for us, utilities and stuff like that, and look at your carbon emissions. But you can also start looking at the social benefits as well. So, like I say, events have quite a wide social benefit, and if we can improve those while minimizing the environmental impact, we're doing good.
Thanks very much, Rob. Now coming to the final question, and I'd like you to give me your one key takeaway for our audience today. So, Mark, I'll come to you first, please.
Well, I would normally say get started, but you've done all that already, James. So I would say link it to the financial data. Ultimately, this is about finances. It has to be. It is not about the environment. Ultimately, it has to translate into economic sense. Otherwise, none of us will do anything, whether we're a big business or a little business. So, and there are economic advantages in doing it, massively so. And so I think you need to think about it in perhaps different ways, 3 years, 5 years, rather than just the next 3 months, as an example. But ultimately, for me, it is about economics as well as obviously people and the environment and biodiversity, I should say.
Thanks very much, Mark. Victoria, please.
Yeah, I feel like we've covered quite a lot, but I would say, yes, just try and get the basic knowledge, the understanding of how your company is being impacted and is impacting the world and all these different areas. Try and be positive and start.
Thanks very much, Victoria. Rob, please.
Yeah, I'm going to echo that as well. And it's simply get started. It seems daunting until you start. And I think just picking one thing, like, kind of read a meter one day. It's a simple task, but once you start that, then you can say, well, can we start reading something else? Can we start tracking something else? And then, it goes from there. But simply get started, try tracking something, see what happens, try and look at trends. And always remember, sort of progress over perfection. Nobody's going to be able to do it perfectly first time. There is trial and error and there is mistakes made, but that's how we learn. So, if we did everything perfectly, we wouldn't go anywhere.
Thanks very much, Rob. I could talk about this subject all day. This is just such a developing space. We have obviously big announcements to come from the UK government next year in terms of its plans for sustainability reporting as we go forward. Of course, the ICAS position, very much supportive of double materiality. We do believe the IFRS standards have a part to play, but we are very supportive of the need to consider impacts, which feeds into the risks and opportunities which are then developed through the IFRS standards. And of course, we've got the developments in Europe as well with the Corporate Sustainability Reporting Directive. And with geopolitical events, including what's happened in the last 24 hours, it really will be an interesting world as we move forward. But I would just very much like to thank Victoria, Mark and Rob for joining us today to discuss this important topic. I'm sorry we didn't manage to get through all of the questions submitted, but we will compile a Q&A document which we will upload alongside the recording of this webinar at icas.com/webinars. Please remember that you can keep up to date with the latest professional news, including information, guides and resources on icas.com. If you have not already done so, then please take the opportunity to join the ICAS Sustainability Business Network. That can be accessed via the QR code on screen. And looking ahead, we have a range of webinars and events in the weeks ahead, which you might wish to sign up for. Firstly, on the 12th of November, we have the Future of ICAS Code of Ethics. Then on the 21st of November, we have the Autumn Tax Update, Part 1, Owner-Managed Businesses and Employment Taxes. Very relevant given the recent budget. And on the 26th of November, we have the Autumn Tax Update, Part 2, the General Tax Update. And then on the 19th and 20th of September, so it's 19th and 20th of November, sorry for that deliberate mistake, we have the CAA Summit for 2024. And I'm hoping you can all join us there. We have a great range of speakers. So please join us over those 2 days. And links to sign up to all these ICAS events are available at icas.com/events. And it only leaves me to thank Victoria, Mark and Rob once again, and of course you, the audience, for joining the webinar today. I do hope that the webinar has been helpful to you. So thanks for joining us, and until the next time, goodbye.
Thanks very much, James. Thanks, everyone. Bye.
Thank you. Bye.
Excellent.